Hello students, I hope you're all doing well. Welcome to another video by QuickStudy. This video covers accounting concepts from topic 1, the accounting environment. And in this video, we are going to learn about the different accounting rules or principles, such as the consistency concept, the prudence concept, the accruals concept, materiality concept, money measurement concept, and the business entity concept. Alright, so firstly, before we start this video, you need to understand what accounting concepts are. So basically, accounting concepts are a business's fundamental rules and guidelines that they follow when they're preparing their financial statements. And these financial statements include the income statement as well as the statement of financial position. So why do you really need these financial or these accounting concepts? You need accounting concepts so that the financial statements prepared across different countries or industries are standardized, which means they can be easily comparable as well as they're easy to understand. And at the same time, you need to make sure that whatever records that you're keeping for your business are reliable. And of course, it has to be comparable across different industries, like I already mentioned. All right, so one of the very first fundamental accounting concept that we're going to talk about is the consistency concept. And this idea states that whenever we are dealing with treating a particular item in the financial statements, we should continue to treat that particular item in the same way as we have done before. And that is because we need to make sure that the records that we have are comparable across different time periods. Examples of how this concept applies to bookkeeping is when we are choosing a particular method of depreciation. So there are two types of depreciation methods, right? There's straight line method, then there is reducing balance method. So if you choose to depreciate your asset using straight line method, you need to continue indefinitely till the end of the asset's lifetime. You need to use straight line method. And then again, when we are talking about stock valuation or inventory valuation methods, whenever you choose a particular method of valuing inventory, you have to continue using that method. And an organization must use the same accounting principle each year, like I've already mentioned. And so when you're calculating, why do you really need to use this concept in application? So when you're calculating profits in a particular year, if you've used straight line method, you will have a particular profit figure. But if you were to use the reducing balance method when calculating your depreciation, you would have different profits. And this is why you won't be able to make better judgments. So it's best if you stick to one particular method. Alright, so the second accounting concept that we're going to talk about is the prudence concept. So often accountants will have to make judgments about particular items. Say for example, when it comes to valuing a particular asset, or it could be machinery or your premises. Or it could be when they're trying to make judgment if a customer's outstanding debt will ever be paid. Therefore, the accountant must ensure that whatever items that you are recording in the financial statements are not being overvalued and that all the liabilities are properly identified. So an accountant basically should show caution when forecasting a business's profit, particularly for the year, as well as when they're valuing assets. This is because if they were to overvalue the profits, the owners might withdraw additional funds from the business, which might not turn out to be good in the long run. And this is particularly important for inventories, which must be valued at their lower value, which is also known as the net realizable value. Alright, so the third accounting concept that we're going to discuss is the accruals concept. The accruals concept states that your profit in the income statement is the difference between the revenues earned and the expenses that you have incurred, and not the cash that you have received and the cash that you have paid for. What that really means is that the revenues in a particular period must be matched along with the expenses that has incurred in that particular period. For example, you record revenue when you've actually sold goods and you have sent an invoice to the customer, not when the customer is paying money to you, because that could be in a later accounting period, right? Similarly, purchases are accounted for as expenses when you've purchased the goods, not when you have made payments to your suppliers. So when you're preparing your financial statements, you need to make sure that you're making the necessary adjustments for your expenses that are owing, or some prepayments for expenses that you have paid for in advance, as well as if there are allowances for trade receivables that you are yet to make adjustments for. So all of these has to be accounted for. And an accountant has a responsibility to make sure that the costs incurred are matched along with the revenues earned in the same period to make sure that the profit figure in the income statement is accurate and reliable. Alright, so the fourth accounting concept that we're going to talk about is the materiality concept. The materiality concept is used because sometimes we are dealing with items which has a value that may be considered insignificant, What that really means is you do not really need a separate expense account for that. For example, when you're purchasing stationery like staplers or pens, you do not record items such as these separately. What you do is basically group them together into a stationery account or record them as petty cash expenses. And the reason behind that is you do not want to make your expenses column or list too big. And at the same time, Materiality can also help you classify certain items into particular groups. So say for example, you have a printer for your office. A printer will serve you in the long run, which means you'll be able to use it for more than 1 year. That does not necessarily mean that you'll be recording your printer in the non-current asset section, because that would be misleading, right? So what you would want to do in that case is write it off as an expense in that particular accounting period. Alright, so the fifth fundamental accounting concept that we're going to discuss is the money measurement concept. And this concept states that any kind of activities or transactions that cannot be expressed in terms of monetary value, or when it comes to valuing a particular asset or item, if you can do that without any bias, that is the money measurement concept. And you should have some sort of objectivity, or accountants have some sort of objectivity when it comes to valuing assets before you are entering those items into the accounting records. Alright, so the sixth and the final fundamental accounting concept is the business entity concept. And this concept states that the business and the owner are two separate legal entities. What that means is that you cannot involve an owner's personal expenses into the business records. So you won't be able to record an owner's home rent into the business's financial expenses account. And similarly, if you were to actually withdraw some money, if the owner were to withdraw some money from the business, a separate account would have to be drawn, known as the drawings account, which would in turn reduce the owner's claim or equity from the business. Alright students, with that we have come towards the very end of this video, and to give you a short recap of what we have talked about in this video so far, we have discussed about the significance of and the types of different accounting concepts, which are the consistency concept, the prudence concept, the accruals concept, the materiality concept, money measurement concept, and the business entity concept. And students, with that, I'd like to thank you for watching this video. And if you've liked this video, do subscribe to our channel, since we post regularly on different topics and subjects that can help you ace your GCSEs. And of course, if you'd like to know more about us or our online tutoring services, do visit our website at www.quickstudy.uk. Thank you.